Are you thinking about your company formation in the UAE? The first big question you'll face is Dubai Mainland versus Freezone. Choosing wrong can lead to costly mistakes, limited growth, and legal headaches. But what if you could have a clear, step-by-step guide that breaks down the pros and cons, reveals the real costs for 2025, and clarifies the new tax laws? In this video, we provide a complete comparison of Dubai Mainland versus Freezone company formation. We'll cover everything from 100% ownership and market access to the real setup cost and corporate tax implications, so you can confidently set up your company in Dubai. So, what is the fundamental difference between a Mainland and Freezone company in Dubai? Let's start with the basics. A Dubai Mainland company, licensed by the Department of Economy and Tourism, or DED, is an onshore company. This means it's fully integrated into the UAE economy. On the other hand, a UAE Freezone company is registered within a specific designated jurisdiction. There are over 40 free zones in the UAE, each often specializing in certain industries like technology, media, or commodities. Think of them as independent economic areas within the country. Now for one of the biggest game changers, ownership. For years, the key difference was that free zones offered 100% foreign ownership, while a Dubai Mainland company required a local sponsor. But that has changed. As of the latest UAE Mainland ownership changes, you can now get 100% foreign ownership for a Dubai Mainland company for over 1,000 commercial and industrial activities. This has made the Mainland a much more attractive option for foreign entrepreneurs. So, is a local sponsor in Dubai Mainland completely gone? Not for every activity. Certain strategic sectors like banking or insurance may still have specific ownership requirements. But for the vast majority of businesses, you no longer need a local partner. This is a crucial update for your Dubai business setup. This is a major point of confusion and one of our big long-tail questions. Can a free zone company do business in mainland Dubai? The common myth is no. The reality is more nuanced. A mainland company has unrestricted access to trade anywhere in the UAE, including directly with local consumers and government bodies. A free zone company is primarily designed for international trade. To operate directly within the mainland market, it typically needs a local distributor or agent. However, some e-commerce activities can sell online to mainland customers, and certain free zones offer dual licenses or have partnerships that allow for mainland operations. So the answer is yes, but it often involves an extra step or cost. If your primary target market is the local UAE population, a mainland license offers the most direct route. This is a key factor in the Dubai Mainland versus free zone pros and cons. Think a free zone means zero tax? Not anymore. Let's talk about the new UAE corporate tax law, which is critical for your 2025 decision. The UAE now has a 9% corporate tax on net profits above 375,000 dirhams. And this applies to both mainland and free zone companies. But wait, what about the famous tax-free benefit of free zones? This is where it gets interesting. The UAE corporate tax for free zone companies comes with a major potential benefit, an exemption. To get a 0% tax rate, a company must become a qualifying free zone person. This involves meeting strict conditions. You must have adequate substance, meaning real offices and staff in the free zone. You must earn qualifying income, primarily from other free zone entities or international clients. And you must maintain audited financial records. Income from the mainland is generally taxed at 9%. So the key takeaway is free zones still offer a path to 0% tax, but only if you meet the free zone substance requirements and your business model fits the criteria. Mainland companies are subject to the 9% tax on profits above the threshold. Let's talk money. What is the Dubai Mainland company setup cost for 2025? And how does it compare to a free zone? Costs can vary wildly, but let's break down the typical expenses. For a Dubai Mainland company setup, you'll have fees for the initial approval, trade name reservation, license issuance from the DED, and often a mandatory office lease. A simple service license might start around 20,000 to 30,000 dirhams, but this can increase significantly based on the activity and office size. Now for the cost comparison. Mainland versus Freezone Dubai. Free zones are often marketed as cheaper, and they can be, especially for startups. The UAE free zone license cost can be as low as 12,000 to 15,000 dirhams for a basic package, which often includes a flexi desk or co-working space instead of a full physical office. However, be aware of hidden costs and package limitations. Some of the cheapest free zones in the UAE might have restrictions on visa numbers or business activities. Always compare the full package, including renewal fees, visa cost per person, and any mandatory insurance or deposits. Your business will likely need visas for yourself and your employees. So how many visas can I get on a mainland license? For mainland companies, the visa quota is generally tied to the size of your physical office space. The rule of thumb is roughly one visa per 80 to 100 square feet. Dubai free zone visa rules are different. The number of visas is usually determined by the license package you purchase. A basic package might offer 1 or 2 visas, while more expensive packages offer more. You can often pay to increase your visa quota without needing a larger physical office. Both setups allow for an investor visa for the business owner and subsequent employee visas. The process is similar, involving medical tests and Emirates ID application. The main difference is the authority you deal with, the DED and Ministry of Human Resources for mainland, and the specific free zone authority for the other. So, with all this information, when is mainland the clear winner? Choose a Dubai Department of Economic Development, DED license, if your business model involves 1. Retail and physical stores. If you want to open a shop, restaurant, or clinic, you need a mainland license to operate in local neighborhoods. 2. Trading within the UAE. If you are importing goods to sell directly to the UAE market, mainland provides unrestricted access. For example, a general trading license in Dubai, mainland. 3. Government contracts. If you plan to bid for lucrative government tenders and projects, a mainland entity is almost always required. 4. Future flexibility. A mainland company gives you the most flexibility to expand and diversify your business activities across the UAE without restriction. Now, when should you opt for a free zone? They are ideal for specific business models where the benefits really shine. Consider a free zone if you are 1. An international trader or consultant. If your clients and suppliers are outside the UAE, a free zone is perfect. It offers 100% profit repatriation and an ideal base for global operations. Think about a consultancy license in a Dubai free zone. 2. An e-commerce business. While you can get an e-commerce license in Dubai mainland versus free zones offer cost-effective packages perfect for online stores that serve a global or regional audience. 3. A holding company. Free zones like DMCC or JAPSA are world-class hubs for setting up holding companies to manage international assets, investments, or intellectual property, benefiting from the potential 0% tax environment. 4. In a specialized industry. If you're in media, tech, finance, or commodities, choosing a specialized free zone like Dubai Media City, DIFC, or DMCC company setup gives you access to a unique ecosystem of peers and regulators. Choosing between Dubai mainland versus free zone is a big decision. To help you, here are 3 common and costly mistakes to avoid. Mistake 1, choosing based on cost alone. The cheapest free zone in the UAE might not be the right one for your specific activity or long-term growth. It could have a bad reputation with banks or limited visa quotas, costing you more in the long run. Mistake 2, ignoring free zone substance requirements. Setting up a shell company in a free zone to avoid the 9% corporate tax will not work. You must have a real operational presence to qualify for the 0% tax rate. Authorities are conducting audits. Mistake 3, not planning for the future. Your initial choice impacts scalability. If you start in a free zone, but later need a showroom on the mainland, you may need to open a separate mainland branch, adding complexity and cost. Think about your 5-year plan. So, which is better, mainland or free zone in Dubai? The truth is, the best choice depends entirely on your business model, your target market, and your long-term goals. We hope this 2025 comparison of Dubai mainland versus free zone has given you the clarity you need for your company formation. The landscape is constantly evolving, so getting expert, up-to-date advice is crucial. If this guide was helpful, please hit the like button. Subscribe for more expert insights on UAE business, and tell us in the comments, which option are you considering for your business? Thanks for watching.